Bitcoin doesn't really have any functionality. It is really a version of gold for the digital age. So that's a very simple narrative. Ethereum is a little more complicated, but you can really think of it as programmable money. If you want a TradFi analogy, it's like an open version of the Visa network or the MasterCard network, where anyone is allowed to build applications like stablecoins or real-world assets or issue tokens with these things called smart contracts. So you can see it as essentially a version, an open computer network that is programmable and anyone can use.
How do you explain the risks around staking from a regulatory perspective right now?
So those have just been clarified. Staking, it's a weird term. Sounds like something that you would order at a restaurant or in a vampire movie.
We're the crypto show.
Right.
We're used
so
to staking.
People are used to that. So there's really two operating systems for blockchains. One is proof of work, which Bitcoin runs on, which your watchers are probably pretty familiar with. Lots of energy consumption, lots of compute power. The other operating system, which Ethereum, Solana, et cetera, run on, is something called proof of stake. And essentially, it accomplishes the same thing. It's a way to run a blockchain in a decentralized way. If you own Ethereum, you can essentially participate in running the protocol. It's like as if you were the Visa credit card holder, you could process transactions. So staking is really the way that if you're a holder or your customers as an institution hold Ethereum, you can actually participate in running the network as if you were a Bitcoin miner, but for Ethereum. And you do that by locking up some of your Ethereum, and then you can share in the growth of the network.
I'm also interested here in your work with exchanges, brokerages, banks.
Yep.
This morning, you might have heard President Trump was speaking to CNBC and talking about the banking industry, criticisms around debanking,
Right.
and the crypto industry in particular has complained about this for a long time, not having access to traditional way financial services. At the same time, you see Goldman years ago forging in and helping facilitate a futures market here, right? So it's not that the banks have stayed completely away. You had JP Morgan and its blockchain product. I mean, how much has the banking industry started to accept crypto, particularly in this new administration?
So I might take a level up, and there's been an internal debate in this country going back since its founding about centralized, Hamiltonian versus Jacksonian debate about whether you have centralized financial entities or you have something more bottom up. And I think crypto is an answer to an overly centralized financial system, which culminated in the great financial crisis. But essentially we have a few large institutions which are too big to fail, which is crazy that they exist. And I think crypto is an alternative to really have a bottom up financial system, which isn't controlled by a few large banks, et cetera. So I really see this as part of the American tradition of having a constant dialogue between top-down centralized power and bottom-up state